Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or on any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, New York coffee. This market has been the story just about of two bearish pitchforks. The first one is the dark blue breached thrice and repaired possibly thrice and breached once more last Friday and today, though it looks like it's being repaired, as just above the breached upper time, currently at 333 even, we have the combined capping action of the very slowly rising gold long moving average, currently at 339.40, and a declining mauve medium moving average, currently at 338.20, plus the 50% Fibonacci line of the big November 24 to February 25 move at 335.15. The second pitchfork is the more recent and larger bright red early February to late April bearish Andrews pitchfork. On this one, the market last Friday exited up and out of the top of the upper time, currently at 323.85, and so far has not come back below it. Now I should point out two things on this pitchfork. This is the first breach of this pitchfork we've seen so far, and second, there is no opportunity to redraw this into a shallower bearish shift pitchfork. So the options on this are what we have on the screen or retirement. Okay, so looking below, we have a congestion area at the moment around the flatlining green short medium moving average, currently at 309.90, between 309.90 to 312.85, containing the 50% Fibonacci line of the May 24 to February 25 move at 310.80. Below this, we have a large stratified series of supports starting at 290.85 and stretching down at most to 252.25. Now, I said 7 weeks ago, and I quote, we might have a possible whole of 2025 a very large double top pattern. Now, this hasn't happened as yet, but it's worth considering and especially remembering. Thus, whilst they are not targets yet, we might have a primary potential down in the 263 zone, and a secondary harder to reach potential down in the 229 zone. End of quote. 7 weeks ago, prices pushed down below the key 325-320 support zone, then down through the next support zone between 309.90 to 310.80, made up from the May 2011 high at 309.90 and the 50% Fibonacci line on May 24 to February 25 move at 310.80. And as I said 8 weeks ago, and I quote, this now formalizes the targets below of a primary target X down at 263 and a secondary harder to reach, seemingly much harder to reach target X1 down at 229 even. End of quote. Well, since then, one new pattern has developed and two new patterns have started to develop. The easiest to see is the possible monthly key reversal we have on the cards for August. Thus, if we close in 2 weeks' time either below 288.70 or over 300.10, then we'll be on. Anything in between and we would have a lesser outside month pattern. Right now we're very much looking at a weekly key reversal up and places the targets X and X1 below under threat. The second possible pattern, it is not as clear here as it is in London coffee futures, we might have formed a June or possibly late April to date descending scallop pattern. Now this looks like a backward letter J on my daily chart. We now need to watch out to see whether the market turns lower or heads higher, as I suspect it is coming to a climax, and I would then be able to give some idea of the move, either higher or lower. The one new pattern that has developed was what I originally thought might be a small head and shoulders pattern, though in the wrong place. Well, this developed into a triple, possibly a quad bottom pattern. We have last week reached the primary and just about the secondary targets for this pattern, so I'll not explore this one anymore. Now there is something else I'd like to look at here, and for this I'm indebted to Ray Bradbury for asking me about New York coffee 23 weeks ago. And I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed a pattern that had not been immediately obvious to me at the start of 2025 when I last reviewed the longer term charts properly. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom for a bright red neckline on my chart, currently at 275.60. The break higher over this neckline reached its primary target on the upside, but there was a secondary, much harder to reach target up in the 433.35 area. What was interesting about this secondary target was that nearby was the next 100% projected Fibonacci line resistance at 433 3/4, quite close in the scheme of things. Prices did indeed turn lower at this key combination of the 100% projected Fibonacci line and the target of 433.35, dropping down through and closing below the important 50% projected Fibonacci line at 347.20. Thus, prices for the first time in May this year closed back down below the dark blue upper time, currently at 385.65 of the interesting 2019 to 2023 bullish Andrews pitchfork. Since then, we have dropped down further below the dark blue middle time, which is currently at 309.95, and in July, prices dropped down to the bright red neckline, currently at 275.60. At that time, and since the markets rejected pressing further lower, though the bright red through the bright red neckline. This is a key neckline and one that will decide the future of this market for many months, if not years. Now, I continue to monitor the market's longer term reaction to this bright red neckline below, but for now we are seeing a strong reactionary move back up, especially if it possibly becomes a monthly key reversal. And it's back up over the dark blue middle time, though not as far as the next resistance, which is the 50% Fibonacci line, projected Fibonacci line at 347 1/4. London coffee. 16 weeks ago I said of the bearish pressure on this market, and I quote, "They now have the overhang of the market from roughly 5,300 up to this year's high at 58.49 sitting above," end of quote. This overhang of bearish pressure and ammunition is important as it started to press lower, heightening the impactful force of the breakdown below an older, shallow long large bull channel. Thus the primary target down in the 41.64 zone and the secondary harder to reach target down in the 35.15 zone were both reached, leaving a tertiary much harder to reach target X2 down in the 28.60 zone, which is still live, though I am now thinking about retiring it given what we've seen over the last few weeks. You see, I recently drew a bright green mid-February to late May bearish Andrews pitchfork, and this I hope would show the bearish angle attack of the market, which it did do for a while. However, the bright green lower time was compromised from mid-June until 2 weeks ago when the pattern repaired. The rise we've seen over the last 2 weeks has pushed up through some insignificant resistances, notably, and they've become supports now, notably the trio of interesting 50% Fibonacci lines. The November 21 to February 25 move at 38.08, the May 21 to February 25 move at 36.49, and the March 20 to February 25 move at 34.81, as well as the bright green middle time, currently at 36.27 of the bearish pitchfork. Prices today have halted just short of the bright green upper time, currently at 41.87. All this recent action has highlighted two patterns. One is complete and one is in progress. The complete pattern is the mid-June to mid-August rounded bottom that has reached all its topside targets. The incomplete one is one to watch closely as it is coming to a climax, and it's quite big. It is a late April to date descending scallop pattern. On this pattern, it would not surprise me to see a hesitation area, perhaps somewhere around the bright green upper time or the mauve descending medium moving average, currently at 43.09, or around the 61.8 Fibonacci lines at 41.68, 41.87, or 42.90, wherever we may see a hesitation. Wherever we see that, it would be a precursor to whether this descending scallop pattern peaks and then heads lower or shoots even higher. And therefore I can outline some potential targets below or above, but only when I know what's happening there. This pattern is similar to one in New York coffee futures, but it's a lot clearer here in London coffee futures. I now await future developments.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.